Well, a warm welcome everyone. Today we're diving into the Solace Financial Investment and Economic Snapshot for March 2025. Let's get started. March was a month of heightened uncertainty, primarily due to President Trump's tariff threats. This significantly weakened investor sentiment, leading to a global equity market sell-off as investors shifted to more defensive positions. Let's take a look at the key market economic developments in March 2025. Global equities continued to decline, with the MSCI World Index down 4.4%. Volatility increased due to uncertainties in US trade and economic policies. Developed markets saw broad sell-offs, while Chinese and Indian equities helped lift emerging markets. In Australia, the S&P ASX All Ordinaries fell 3.5%. Weakness persisted across all sectors, with notable declines in the information technology sector and consumer discretionary sector. However, utilities gained 1.5% as investors sought defensive assets. US equities led developed market declines, with the S&P 500 down 5.6% and the Nasdaq dropping 7.7%. European equities also struggled, but the Hang Seng rose by 0.8% and Indian equities rallied, with the Nifty 50 climbing 6.3%. Commodities saw significant movements, with gold surging 9.6% and copper gaining 12.4%. Brent crude held steady at $72.35 per barrel. Bond markets traded sideways in both the US and Australia. However, Germany expected a major bond sell-off, with its 10-year yield surging 31 basis points in one day. Now let's talk about economic developments. In Australia, Q4 GDP showed some improvement, rising to 1.3% year-on-year. Consumer confidence rose to a 3-year high and inflation continued to moderate. In the US, economic uncertainty clouded the outlook due to volatile trade policies. The Federal Reserve held rates steady but revised their 2025 economic growth forecast lower. Germany announced a significant shift in fiscal policy with a €500 billion investment infrastructure fund. Chinese authorities maintained their 5% GDP growth target for 2025 and announced additional stimulus measures to boost the economy. Looking ahead, the risk of a global trade war has heightened fears of a US recession. However, a de-escalation of trade tensions could lead to market stabilization and a potential recovery in risky assets. Now let's take a look at the major market indicators for March 2025. Interest rates saw some changes, with the Australian 90-day bank bills at 4.12% and the 10-year bond at 4.47%. The US 90-day T-bill remained stable at 4.21%, while the 10-year bond was also at 4.21%. In currency markets, US dollar was at 0.623 against the AUD. The British pound was at 0.485 and the euro was at 0.580. The Japanese yen was at 93.56 and the trade-weighted index was at 59.60. Equity markets saw decline, with the Australian All Ordinaries down 3.5% and the S&P 500 down 5.6%. The MSCI World Index down 4.4%. However, the FTSE 100 and the DAX showed some resilience, with gains over the quarter. Commodities had a mixed performance, with iron ore down 1.5%, crude oil up 2.7%, and gold bullion surging 9.6%. Other updates in March 2025 include the Social Security debt waiver for legacy pensions, personal income tax cuts passing Parliament, and the extension of the instant asset write-off for small business. That's all for today's snapshot. Remember, navigating this environment requires discipline, yet dynamic approach to portfolio management. Until next time, we'll be watching.